Those among us that are viewing iron ore returning towards $60 to $70 a tonne may be disappointed. Kash Kamal, Sucden Financial. National Australia Bank recently forecast the price of iron ore to slip back to around $40 a tonne from 2017, which is the latest in a string of gloomy projections for the commodity. What is your assessment of the price of iron ore?
Well, we've definitely come off significantly from the highs seen in April, and May's seen a lot of firm selling, but at the start of this month the price has stabilised, and I think that's down to a weaker dollar, which has definitely offered some reprieve from the slump that we saw last month. The fundamentals, however, they still point towards testing times ahead, and those among us that are viewing a return back towards $60, potentially $70 a tonne may be disappointed. Our outlook is for prices to remain around this level for the foreseeable future, say going into the end of the year. But our 2017 outlook is something that's going to most likely see headwinds prevail, given the fact that we're going to see a lot of tonnage come online, and with China and India in particular dealing with overcapacity in their steelmaking sector, it doesn't look as if this extra capacity can be readily absorbed.
Okay, it seems increasingly likely, though, that the Federal Reserve will hold off on raising interest rates in June, with speculation as to whether the central bank will act in July. What do you expect to happen? And crucially, how will this impact on the iron ore commodity?
Yeah, I think a June hike seems to be off the table for now. The weaker non-farm payrolls that we got for May really did impact investor sentiment. It was not only below expectations, but it was well below expectations. And given that we've got the Brexit referendum round the corner, it's unlikely that June will see a rates rise. July, I think, is a similar story. What's crucial is the wording that the Fed use and Janet Yellen's testimony. We've seen risk appetite fall in recent weeks, and while this has seen a softer US dollar, which has supported prices, the overall outlook for the commodities market has seen a pare back, and potentially market conditions are going to remain volatile heading into July. And I believe that the participants in the iron ore market will opt to stay on the sidelines and adopt a wait-and-see approach, waiting for further macro indicators before they firmly decide on a direction.
Lastly for today, which key indicators will you be looking out for that have the potential to shape the iron ore commodity in the short term?
So definitely we've got the FOMC rates decision coming up this week. Unlikely to see a rise, but it will be the wording and the statement that accompanies it, which will be poured over with great scrutiny. Aside from that, we've got Janet Yellen's testimony to the Senate banking panel next week, and this sort of stuff will provide an insight into the Fed's thinking regarding global macro conditions. Aside from that, the start of next month is a busy one for Chinese data, and we've got manufacturing PMI, trade balance, inflation, and Q2 GDP data. So this will all give an insight into the state of Chinese demand, and coupled with the Fed thinking on global macro conditions, it will provide quite a well-rounded picture for participants in the iron ore market.
Thank you, Kash. Be sure to check back with Dukascopy TV for more updates throughout the week. We'll see you next time.